Hello to all traders. Good evening, or morning, or afternoon, whatever you're watching us from today. We are here again for our monthly engagement for this month's NFP. It is Friday, the 8th of May. And, oh God, I think we are actually expecting the worst NFP ever. These numbers are going to be critical for not only for the US economy, obviously, but also for the global economies, because as we all know, the US is the biggest economy, has the biggest jobs market in the world. We've seen the jobless claims reaching, actually breaking the 33 million barrel barrier on a 4-week average, which makes me really think, are we going to see this being broken by the NFP today? Well, this is something that we really have to wait for another 30 minutes to find out. I want to welcome all of you, and I hope that you, your loved ones, families and friends are all safe and well. So what we're going to do today, it's we are going to go through, of course, some slides first. I will try to go through those as soon as possible, to be honest, and then we're going to jump onto the charts. Now, these slides are going to help us to get a macro perspective on what is really happening with the NFP, what has been happening with economic data in general in the US. I mean, we all do know that the situation globally, we are in a recession, not to say if reaching a depression. We all know the situation with economic indicators is not really to be looked at. It's not really giving any signs of, support. It won't give us anything. Other than that, it's a procedure that we have to follow regardless. Okay, so for that reason, we're going to go through that, of course, for the next 10 minutes, and then we'll jump to the charts. If you want to connect with me, if you want to follow what I'm doing on a daily basis, there's regular posts on Twitter, LinkedIn, and also Instagram on different aspects. Usually is technical analysis, to be honest. I'm looking at the markets on a daily basis, offering a couple of opportunities and also some technical analysis. Now, we do have also our Telegram channel, so feel free to join as well. It's where we post daily articles, but I would say more focused on technical analysis. Before we go ahead, I want to read the risk disclaimer. Foreign exchange trading investment derivatives can be highly speculative, may result in loss as well as profits. Foreign exchange derivatives trading is not suitable for many members of the public, and only risk capital should be applied. These webinars provided for information purposes only. No information contained herein constitutes solicitation for the purpose of the purchase or selling of a commodity, security, or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analysis supplied. And that's what I meant about going fast into the slides. So let's have a look at the NFP preview, right? This is the analyst expectations. Guys, as you all know, we are expecting around 22 million minus, actually, job losses, pretty much. Okay, these are not job cuts, they're not unemployed benefits, it's job losses. So that decrease is from 701, that was last month, to minus 22 million. Now, in February, which is the April release, right? That should be March data. Sorry, excuse that. It's just a mistake. Missed expectations by 600K, right? Because analysts expected only minus 100K, right? Which is, I think it has to do with data discrepancies and when the reports are being done, the statistics are actually being taken rather than anything else, to be honest, right? Now, the forecast is pointing to a weaker jobs report again, of course, one keeping in mind the jobless claims as well and the cuts of the coronavirus. We're looking at, as I said, the biggest decline that we've ever seen. If I'm not mistaken, 1945, it was around 2 million cuts. Then before that, GFC, obviously, I think we're around, maybe actually very near to where we actually delivered last week. Nevertheless, now this release is going, was one of the worst in the payrolls history, okay? Actually, that it was 699. I have it over here. GFCs dropped to 699,000 jobs, only 2K less. So we are the second worst now. And I mean, we can't really wait to see what's really going to happen with this one. Now, you've seen how big the decline is. Let me just grab my pen here as well. We use blue color. It's a huge decline, right? We're talking about this trend line of our previous NFP webinars. It's been, drawing that trend line over here. I've been drawing that trend line here for a while now. I wasn't expecting, obviously, a break like this, but there's nothing we can do, obviously. With the situation, this economic crisis was not predicted, obviously has nothing to do with economic data or global economies. But of course, it became very relevant to all economies, right? Now, going into the next slide, and let's just grab all of those components of the report individually, because as you might as well just know, right, most of the people will just look at the headline number and just trade that. Yes, this is what's happening, indeed, but this is momentarily. Everybody's heading the headline number, okay? But when it comes to trading after 5 minutes post-release or 30 minutes, even sometimes 1 hour, or go into the markets like after you've seen some different like validation signals which come from a technical perspective. We have to look at all the components, because these are what are going to determine the not the immediate term, okay, of the release pretty much, but the post effects of the release, which means, I mean, if the headline numbers are bad and then unemployment numbers and average hourly earnings as well are bad, then this is going to be all supporting a move to the downside. But if the headline numbers are bad, and then we've got average hourly earnings and also unemployment rate being actually upbeat, that means that we're going to get a whipsaw effect most likely, right? So looking at those, we are expecting to go from, 1 second, let me just, okay, there we go. We are expecting 3.8, yeah? Okay. Non-farm payrolls expecting an increase, but these forecasts, I can assure you, it's wrong, okay? Because if you see this number over here, this is taken from a different source, okay? And we are really looking at 22 million this time, okay? So ignore this number over here, okay? I will actually just go ahead and cross it out as well, so we can stop looking at it. We're expecting 22 million, okay? Now, average hourly earnings, okay? We are looking at 0.2, okay? That was last time. We're expecting a 0.4, okay? Now, we've seen an increase from 0.3 to 0.4, okay? Last month, the previous month forecast was up by 30 basis points too, from 0.1 expected. Now this month, 0.2 isn't far from what we can get, okay? And that would be only 0.2 down from last month. Now, going from 0.2, from 0.4 to 0.2, it is indeed a decline, right? So, but however, what we're looking here when we are actually receiving that data, we don't want to look whether that's happened. We want to look whether the decline was actually bigger or smaller, okay, than the expectations. This is how we trade the event. Now, we are going to get the non-farm payroll numbers, right? We're going to get the unemployment rate. Everybody will focus on non-farm payrolls. If we get a figure that is above the 22 million, this is going to be very, very, very bad for the dollar, right? Now, if the figure is better than the 22 million, I honestly do not know whether markets will like it, because it's going to be negative, okay? Do not forget, it's going to be negative again, okay? So it's very, very, very risky, this specific decline, I would say, this specific report, sorry. Now, when we look at the hourly earnings, but on year basis, okay, we expect to remain at 3%. Last month, the year came out better than expected, from 2.9 to from 2.9 to 3.1. Yes, understood. But the thing is that we really need to look at the inflation, right? And wage push inflation is expected to rise. Okay, but inflation eases on the other side, because there is two different types of inflation. I'm not going to go into detail. Wage push is when we have higher wages and money spent are increasing prices, and then you've got the push-pull, which is oil prices. When they are increasing, they are also increasing inflation because of higher prices. Now, with oil being very, very low, right, and very weak, I mean, in the medium term at least, then it really poses a big question. Really, are we going to get really 3? We will see that what happens on that end. Now, the CPI inflation on the other side, right, decreased from 2.3 to 1.5. Okay, this is a very huge drop. We missed estimates. It was 1.6. I mean, not too bad for an estimate. And the PCE, which is the inflation that the Fed is looking to set policy, also fell 0.3% on a month-on-month basis, right? I've been talking about the CPI trend line as well. Obviously, I wasn't expecting this decline over here, as you can see with the red line, but, well, it's happened. There's nothing we can do, okay? Now, on to the next slide. I want to talk about the macro perspective, right? And this comes to two different things, okay? We're talking about lagging indicators and leading indicators. Obviously, lagging indicators are the ones that we are waiting for the data to show us what happened in the past, right? Sometimes it's on a monthly basis, like the NFP, for example. It's a lagging indicator because we get the results a month after. Or leading indicators, which means we are looking at the current price action on the treasury yields and the equities, as well as the crude oil, okay? Now, the rule of thumb is this, that when yields are up, the market sentiment is bullish, okay? However, you know, that hints, of course, to a good NFP. But when that's not the case, well, it means that sentiment is bearish, okay? Now, we cannot really take that any change to heart, right? I mean, if we're talking about like 0.1, 0.2 percentage wise, is not enough. That could just be anything that has happened, I mean, on a daily basis. We could just be, you know, expecting, if we just suppose that prices moved up at the beginning, or the opening, and there was like a 2-3% increase, and then the markets reverse, you know, like 2%, we'll have 1% still. So we need to look at the leading indicators, but at the same time, we need to look at where prices were at the close, okay, of last day, because we need to really see what's really happened during the day. I mean, from the opening of, let's say, Friday up to the time, like a few minutes before the release. Okay, now what I have done for this, right, I've put this table together, which you can obviously see. There is the leading and the lagging indicators, lagging and leading, if you may, which are going to give us a hint about what we can expect. I mean, everybody has a hint, to be honest. We do know that's not going to be a good NFP report, right? But don't forget, good really depends on what the forecasts are and what the actuals are, okay? Now, from the last figures I have here, if we look at these quant trial here, this is the leading indicators, the lagging indicators and leading indicators. Now, most of the lagging indicators are negative. 1, 2, 3, 4, 5, 6, 7 over 3. Okay, that's a very bad score, right? It's a very bad score. Now, the thing is, equities are up, crude oil is up, treasury yields is like they don't move. So there is high uncertainty for treasury yields, or maybe because they just really seen a huge decline, and we don't want to see negative yields, at least on the 10-year yield, right? That would be crazy. It means that the Fed most likely will start shifting interest rates to negative territories, which is not good, right? Now, equities are doing pretty well, right? Now, this is a very good indication for a pro, right? But the cons are just way too much, and they're weighing way too much to consider these as positive. Okay, oil also has a very good upside move. Okay, now don't forget that equities, we really have the earnings season as well now, and corporate, actually technology sectors are doing very well. So this might be because of some equities actually have been reporting very good numbers, right? So, I mean, I'm not saying ignore it, but keep that in mind at the back of your hand. Now, crude oil, we've had some news about Russia accepting to cut. There is some sort of, positive sentiment, let's just call it. Plus, yesterday we've had headlines coming up saying that US and China phase 1 is progressing well. I mean, but the day before that, we had Trump threatening China, and actually blaming that, the Wuhan virus was indeed, there was a lab infused virus that was out, what the outbreak actually routes to sources back to China. That was not very good for the press or for anyone, to be honest. Very hard stance against Chinese, if you ask me. Now, there is, we've got that on out as well, this sentiment. I mean, the important one to look at, because usually we do look, is the ADP, right? We've had like 20 million losses yesterday. The release, the jobless claims, there were like 6 million or something. I mean, we are in a total of 33 million or something. Or this is the 4-week average, right? If I'm not mistaken. So we're looking at this, and we know roughly what we can expect as well. Most of the times there is a huge divergence, but I believe this time we won't see any divergence. Now, how to choose what pair to trade? Okay. The usual suspects, euro, dollar, yen, okay? But what we can also do is, see how our banks exchanging between them, right? And we need to look at the interest rate differentials now. So I'll give you an example. United States, Canada, Australia, New Zealand, all of them against Switzerland, against the Swiss franc, would make a very good buy opportunity, right? And we're talking regardless of NFP now. But obviously, since we are talking about NFP, and this is for United States, USD and CHF is always a good opportunity to buy in case the NFP is bad, okay? If the NFP is good. So let's go with the blue again. Buy if the NFP is good. Now, in case, of course, the NFP is bad, because again, we're talking about the USD, so we always need to take the USD. We can trade that against the Canadian dollar, the Australian dollar, the New Zealand dollar, any of them, because they have same yield as the United States dollar. I mean, it's the best we can do, to be honest, those three. So USD, okay, let's just say USD CAD, okay, in case the NFP is bad, okay, then that means that dollar CAD will move down, okay. Now, we can also take New Zealand, let's say, against the USD, okay, in case the NFP is bad, again, here we can buy, right? But now we'll have this one aspect out. So then you can ask yourself, okay, so which pair should I pick between them two, USD CAD or New Zealand USD or Aussie USD? Well, this is what we're going to do in the next slide, right? We are looking at the Forex currency strength meter, okay? The strength meter is telling us which currencies are strong on their own, right? There is no correlation here. We make the correlations ourselves. So what do we see? we see the Kiwi being very strong today, okay, which is a plus. Okay, this is a plus for me. Why? Because I know New Zealand USD, okay, in case the NFP is bad, okay, I know that I can actually go and buy New Zealand USD. Now, obviously, I'm not going to look at that huge spreads, but I want to look at the weaker option as well, because we need to have two different pairs here, right? We need to have one that will perform good and one that will perform bad against either a good or a bad NFP, and of course against the dollar. Now, this one, okay, GBP USD, what we will do here in case the NFP is good, okay, what do we want to do? GBP USD, yeah, sell, because the dollar will increase against the will rise against the GBP easier than it would rise against the Aussie or the Kiwi or the Swiss franc or the euro. Okay, but again, as I said, the USD CHF is always an amazing option if the NFP is positive. Okay, now let's just delete all that stuff. Before we go into the charts quickly, in simple words, if you haven't done this before, stay out. If you don't have risk management or money management procedures, better stay out. If you're just here to look, pay attention to the technicals I will speak about and how we draw trend lines and resistance levels and all that stuff in the next few minutes. If you have open positions, you can either hedge depending on how much you are down or close them completely. If you are risk averse, close your trades as well. You know, it's better to be safe than to be sorry. And if you're really keen to trade, it would be a very good idea, okay, to wait post-release. Analyze the data and then make a decision, okay? Now, we're talking about the divergence always being very important when, the forecast and the actual diverge for like 50K or over. I don't think in this case it's going to matter, to be honest, so I would ignore that note. But once the economy, US economy reopens, there is some states actually, not California, I think, and some other one, New York still closed anyway, then maybe we can start reconsidering this note as well. Now, what I want to do, guys, is I'm going to jump to the charts, okay? So we have the euro dollar here, okay? I'm just going to be quick about it because you shouldn't be anything more than that. These reports are traded very, very, very fast, and you don't need really to dig into much detail, okay? This is what are the distances? Okay, this is a good point. This is a good point. I'm going to draw those levels here. They are very important. You do whatever you fancy with them, okay? There we go. And another one, okay? Here. Okay, so we are actually now pretty much doing nothing over here. We're waiting. We have 5 minutes left. On euro dollar, this could be, for example, an entry like 8 pips above. This could be an entry on the downside, but it's a bit far, isn't it? So what if we just get another one which is closer to the current price, right? This is the bottom of the previous candle, okay, on the 1 hour chart. There is no reason to look at anything smaller than that or bigger than that. Okay, now at the same time, don't forget, I do like to draw my trend lines always. So it looks like we're crossing above that anyway, slowly. So keep that in mind. The next level, because here we are at 5. So if we enter, we'll go 2.6. So we need another one up here, right? That would be another one. Okay, and then, long term, we also can look at this one. Okay, and on the downside, the next one will be here. Okay, and that will be it for the euro dollar, guys. This is as simple as that. So what you want to do really is focus on high activity levels. High activity, we're not just talking about support and resistances, guys. Support as a resistance is not just a level that is right here at the top, right? That's not just the resistance, you know. It is indeed a resistance, but you know, this resistance is better because I have more quotes here, more contracts being executed over here. This is a much more interesting level for buyers and sellers rather than that, okay? So anyway, let's just go on the next one quickly. Kiwi, we talked about Kiwi, right? So let me just add the Kiwi here quickly. That would be our buy, New Zealand USD. Let's go down here. Oh, it's already up a bit, huh? Okay, this one is, it looks like that's a target. That's an entry, potentially, right? As I said before, you do what you wish with it. Bottom of the candlestick. Where are we here? No. Well, the other top is here, 40, and then this is okay for us. This is okay for us. And then the other one, yes, high activity, boom. That's it. Kiwi done as well, okay? Now, which one do you want to see? Which one do you want to draw supports resistance levels? Okay, let's go for, okay, let's do dollar yen and Swiss franc against the, dollar against the Swiss franc, okay? Okay, so where are we here? That would be too close. Maybe down here, 16210. Yeah, that's fine. 10 pips away, nearly. On the top of the top, it's easy. And then we go 1. We go 2. We go 3. Yeah, and we need to find something else on the downside too. Okay, where would I want to go? That's the same. Let's go to the next one. That's the one. Okay, so that's dollar against yen as well. Okay, and then dollar against Swiss franc, unless if you have something more better that you want to suggest. USD against Swiss franc, we go for, it's also falling. Where are we? 90. Oops, I see a very good break of the 97 psychological here in case it's worse than expected. So we'll have to go here. This could be a good entry. Take profit 1. There, take profit 2 and take profit 3. Why not? You should have many different targets because it's always safer. Risk management is the part of trading. Okay, if there's no risk management, don't bother. You're not gonna make it. I'm sorry to say. We can actually stick here. Okay, right at the top of the, and then yes, that means we can move that up here, and that means we can move that up here. Okay, so that's it. Okay, that's it. So what I will do now is go quickly on a 4 chart view, okay, and we will upload the rest. Okay, there is 1 minute left. Use the CHF here on the 1 hour. I want to see Kiwi here. For some reason, all our levels disappeared. Which one is this? Dollar CAD. This is so weird. Anyway, I'll go back on the different view. I don't like this one. Okay, use the CHF. Okay, I hope our Kiwi is back. Okay, there we go. So I will pay attention to New Zealand against USD. Okay, this is in case the results come out worse than expected. Okay, so let's go also on the calendar here, see what we're really getting. Okay. Where is it? Where is it? Should be out. Should be out. It's out. Oh, It's out. 20 million. Okay. Unemployment rate. Look at this number. 14.7. I said forecast 3.8. I mean, are you guys serious? 3.8. I mean, better than expected, better than before. How is that even possible? Unemployment, okay, 20 million, and wow, average hourly earnings went up to 4.7%. Looks like some companies paying better now because there is who knows what. And year on year, 7.9. Wow, these are huge numbers. These two numbers are very, 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 very good. Okay. NFP as expected. Okay. I mean, 140K below, but as I said, it doesn't really matter. This number is also huge. So I would call that a very, very, very mixed report, guys. Okay. Have you seen the move from here? From down here, yeah, all the way up here, Kiwi, right? Well, that may well just be markets pricing in a bad NFP, right? That could be the case. USD-CHF. We got that first move to the downsides. What were we talking about? Was this up or down? Actually, it was down, right? It was down, which means that would be a long trade. So we'll have to expect prices to go to the 277 in order to get profit. I'll be honest, I would close my trades right now if I was in. Okay. SP doesn't move. Gold moved a bit, but yeah, dollar yen is moving up. This is purely because of the average earnings, which are huge. Okay, I wasn't expecting actually these numbers on the earnings. Okay, pound, as I said, falling. You know, did we not do pound, or it just disappeared as the previous one? Yeah, it looks like it disappeared. We had an entry here, no? And we had that one. We had that one. I mean, I'm not sure if we had it, but it would be exactly the same drawings. Yeah, there. So, and euro dollar also falling. So euro dollar case, we would be just entering this trade now on the downside at 36, 0836. Okay, 10 pips down is the first take profit. And to be honest, I wouldn't go for a second. I would just close my full size position over 10 pips and just go home and hope that next time we'll get some more movements. I'm expecting this to move slowly, okay, guys, because most of the, I mean, all of the events are priced in. All of the events can be considered as priced in because all the markets, most of the markets are moving because of coronavirus news, okay? It doesn't really matter what's happening in the economies. All the economies are doomed. It doesn't really matter if ISM manufacturing or services will come good for a month and then bad for a month or worse than expectations. I mean, it does move the markets in the short term. If it's good, that's a good way for a pullback, pretty much, right? A cause, let's say, for a pullback. But all the markets are being affected negatively. So you're going to have some pairs going either up or down, depending which one is the denominator, right? So now that being said, you know, markets are already moving in certain directions. Economic data won't change much. It's actually, they will start having more impact, in my opinion, once markets, the economies reopen. I mean, in China, for example, we should be looking at the data with a closer eye than what I would look, for example, the US data, right? US is still closed. Europe is pretty much reopening slowly. I mean, here in Cyprus, probably within the middle, we have two phases of reopening. Okay, so there is some restrictions now that are being eased. Okay, and with that easing, we get, you know, we get different businesses reopening. So that should start helping the economy moving forward slowly, right? Now, that being said, other countries are still locked down, and other countries still actually haven't even reached their peak in Europe. So you can really look at this. We have to look at this with an individualistic perspective, let's just say, country specific perspective. You look at Switzerland, for example, differently to Germany and Italy and Spain altogether. Okay, now even with what's happening with the ECB policy and their mandate, you need to look at what's happening in the south of Europe and north as well, you know, in all different geographies. Because, for example, Germany obviously is the biggest economy in Europe, not affected by tourism much, but affected by the manufacturing car industry. So, which is very well affected. But obviously, the tourism industries are very well affected as well. This will going to go for countries that are in the top 5, like Italy and Spain, for example, right? They're gonna struggle for months, for the upcoming months. So really need to ask yourselves, when our economy is going to reopen, and what each country's reopening mean for the specific currency. Okay, dollar yen. What was Kiwi? Let's see what's happening on Kiwi. You see, I mean, everything is just a very uncertain candlesticks. As you may, you know, if you may, we are probably interested in just taking quick profits. If you're there and you have that green on your on the plus on your account, you know, you could consider just calling it a day. Okay, but even on the other side, the negative side, if your losses are small, why risk? Since the data are really mixed. I mean, to me, the data are very bad, to be honest, reaching like nearly 15% unemployment. I think this number will be revised anyway, but this is a huge number, 15% unemployment in the US, okay? It's big. Now, the average earnings do offset a little bit. I think it will be in the very short term, however. So USD JPY rising. I'm not sure it will continue rising for long, to be honest. Okay, and at the end of the day, this also looks a little bit corrective, no? So we could see that happening. Yeah, I wouldn't be surprised. So really always need to keep a broad perspective, okay, in mind, looking at the fundamentals. So that means, I mean, for example, if you follow the news, what happened between US and China, what's happening in the oil markets, what's happening, relatively speaking, to, you know, to other areas, like what's happening with the indexes, what's happening with corporate earnings, because all of these are affecting employment, right? US, China, phase 1 progressing positive. Oil markets, Russia, you know, is in their stance, and what else was it? China, I think there was a Bank of China repaying retail traders that lost money in oil products, something like that as well. I read the other day, positive. You know, you have to make a very big table Oil, positives and negatives of the past week. Equities, positive and negatives of the past week. Currencies, we can look at like the king, which is the dollar, obviously, to see how that performs, but it would be more interesting, more helpful to watch at the US yields rather than anything else, right? Then, in conjunction, look at yen, Swiss franc, and gold for safe haven understanding, for flows understanding, right? What else? I mean, it's US-based data, so we don't care about Brexit at this moment. We're not looking at this at all. But we might be looking at how weak the euro is against the dollar because of uncertainty around Brexit, as well as what's happening between South and North countries in Europe, about the ECB's policy and the Germany's ruling. There is now a lot of uncertainty in general. Obviously, that's expected with what we're going through. But all I'm just saying is that once we do that, then we have to go to the economic data, make this nice table I did in the slides I showed you before, leading and lagging indicators. So we've got leading, lagging, we've got the first one is sentiment, right? That's what we need to understand. We need to understand sentiment, not only from the flow perspective, but also what's really happening around the world. And then we go into technicals, okay? And we'll draw our supports and resistances and our trend lines. We'll look at the levels. Where are we? Are we to 106 or are we to 106.50 closer? Because obviously you do know that round numbers, the big figures are the ones that attract both sellers and buyers, right? Now, that being said, look at this move to the upside. Where did that happen? It happened at 106. You see, that has been since yesterday or so, right? Nice bounce, 1, 2, 3. It looks corrective, it moves up, okay? Dollar, yen. That would be the entry. That will be the exit, okay, in case you're in. It might just go up here because, look at this. There is no price over here. There is a lot of pricing over here. High activity means high activity here as well. So we could see prices going up or down, or at the same time, you can have high activity because everybody is buying, right? So don't forget that. I do think that we might get that price moving up to, we are at just crossing the 106.50 pretty much, okay, crossed it. If we get a break, so I will give you an example. We'll have one lot up here, take like 50%. So close 0.5 at least. Move your stop loss up here. That's a break even, okay? BE. So you have pocketed that already, and if you come down, okay, that's it. And you shouldn't really care about that any longer. If it comes down, it means that most likely will move lower, okay? So take 0.5, move your break even, you have the 0.5 and a risk-free trade open, okay? And then, of course, if prices move to the next level, which is up here, maybe even a little bit lower, 106.75 I would say. Okay, you can also close your trade there. Now, obviously from 60 to 75, 77, we have 150 pips. You could break it down your trade here, 1550. So you can close 0.25 over here and another 0.25 of the full lot over here, right? That way, and always, of course, moving your break even, okay? So from here, this is your entry. Here's how it works. Your entry becomes your stop loss, okay? Your first take profit, pretty much, is where you move to break even. Your take profit 2 is where you move your stop loss to take profit 1, okay? So when that closes, I'm going to break even. Then when it moves up here, I'm gonna put my my stop loss up to my first entry. Okay, and I hope that makes sense. Now, guys, if you don't have risk management or money management, or you're not looking really at what lot size you're trading, well, things are gonna be quite hard for you. Now, as you see, gold is falling along with the yen, and the Swiss franc should be falling too. Okay, so it's moving up. Swiss franc is doing a bit better than yen and gold. So S&P, yes, should be a little bit higher. New Zealand is falling, but it's holding well because it was strong during this session, right? Euro dollar should be falling too. The Kiwi is doing a bit better than the euro dollar. It looks a little bit stronger, but GBP USD, yeah, big fat doji looks like it. Now, pay attention to this, guys. It's now 3:47 local time. So there is like 13 minutes until the 1 hour candlestick closes. Now that close is very important. Okay. Sometimes it's this close that is very important, or sometimes it's the one after. So we're looking at +1 to the current hour close. Yes. Because those candles usually give us the confirmation we need. For example, we could get, let me just go on the dollar yen again, because I like the dollar yen today. Okay. So we are here on dollar yen. Okay. And we're looking at prices just broke that level, right? So we're looking at take the 1675 next. Now, that is probably going to get there anyway in the next 12 minutes, right? Because at the end of the hour, bulls really want that level to be taken out, because bulls will become bears. So they will want to sell. Now, here's the thing. If we get here at the end of the hour, then we're going to get some resistance here, okay? Now, depending on the candle next, the next candle, right? If a candle it can be positive, it can be negative by closing on the negative side, right? Anything above that, positive, anything below, or it could even be a doji, okay? Now, if it is a doji, that's a good sign that most likely going to see prices falling lower, right? And where are they going to go? Well, they're going to go, and let me show you that. You will need to put your Fibonacci retracement tool here, use it, okay? But don't go down there and come up here, okay? It's a bit pointless. I mean, sometimes it's not pointless, it's good to find confluence levels, but let me just tell you what is the right thing to do. Go at the bottom, at the opening, okay? Opening, not the low, opening of the price. And I mean, we just assume now that the candle close will close there. Look at this, okay? If we assume the candle will close close to that level, well, even if it doesn't matter if it's taken out, okay? So if prices come here, we'll use the opening price and the highest or the lowest of the current hour. Okay, so if we assume we'll go there, look at this, the 38.2 is exactly our entry level, right? Our first take profit, which is the second entry. Now look at this. What you want to see is go down to the 50. Okay, so we'll have the 50 now as well, which is over here, right? Now, what does this mean? That in case prices, let me get green. In case prices come up here, oops, 1 second, sorry about that. In case prices come up here and close, then we're most likely going to get a correction down to at least the 106, whatever that level is, which is the 50 Fibonacci retracement, or the half of these range, let's call it, right? And from here is where we can start looking for further clues, okay? Either we're gonna go up or we're gonna go down, okay? But this doesn't necessarily mean you will have an ending hour here, right? But this level most likely will get crossed. If not, and you come to 38.2 and move higher, most likely going to move higher, okay? If we come to the 50, we could stay in range. If we go to the 61.8, it means that most likely we're going to move lower, right? When we move lower, the first target again will be the 106.36, which is the entry, the opening of this candle. Okay, this is a high momentum bar, if you have heard about this. If not, you have now. Okay, so that's how things work. Now, let's check. You see, in general, we have safe haven falling, which means also the WTI should be moving up. 25. Well, it looks a little bit, mixed at the moment. I'm not surprised. It's okay. It's just these wage numbers looked very surprising to me, as well as unemployment as well, to be honest, Now, GBP USD keeps falling. Are we going to get to the target? Maybe, maybe not. Euro dollar got to the target. So we had that sell there. As I said before, don't go for longer. Just stay within the very short ranges. This is going to be, I wouldn't say uneventful. It is, but not as much. Okay. USD CHF moves up. That target is also taken out. New Zealand USD, we're still far from the target, but we didn't care about New Zealand USD anyway. We cared about the high, the move to the upside in case the report was negative. So don't forget, this would be looked at only if we had a negative NFP. The NFP is mixed, in my opinion, with some signs, of course, on the positive, because we had better headline and a huge wages report. Then those is the question, do they outweigh the huge unemployment rate or not? Now, USD CHF, as I said, taken out, okay. And we said about USD CHF, if the NFP is positive, as you can see, for me, the NFP is not positive. It's just mixed. And we're just visiting very short ranges here so that institutions can take a little bit of profit. That's it. That's hard work, guys. Okay, there's nothing more than that to take in profit. It's how markets work. Who do you think is moving these markets? Institutions trading. It's institutions trading. So they want to, it's Friday today, they want just going to take some money, put them in the pockets, go home for the weekend. That's it. That's all there is. Gold is falling. There we go. 106.14 done. The question is, we reached that level. So yeah, this is another high activity level over here, especially when we go back in time a bit. Yeah. So that was already taken. 106.70 as well, a round number. So here's the thing, guys. There's 6 minutes left to the hour, okay? As I said before, if we close below that level, okay, 106.16 or whatever, I would start looking at this with a different eye. If we close above the 106.65, which is the high recorded by this most recent high top, okay, then this is again going to be looked with a different view, okay? So if we close above that level, I'll be looking to get to the 106.76. If not, I'll be looking to get down to the 106.56 even in the short term, okay? That's for the dollar yen. That's my pick for the day, okay? Because it seems that safe havens are moving lower, and that is, I believe, because there is a huge, the wages rising. It's wage inflation, which indicates inflation means high inflation would actually have to be controlled with higher interest rates. So, it doesn't mean that anyone would start hiking soon, but it's how the markets work, right? Because no one should be that crazy and go and start hiking now. Actually, I do believe we might see banks changing their policy even more. There is, I mean, from what I recall, Australia has been the one that has been the RBA the most optimistic, I would say, the most upbeat, because they've settled down in how much bonds they buy. Okay, and that was, I think, a week ago or so. Was this too fast or not? We're going to see. But if indeed is too fast, then it's gonna turn out to be worst for the Aussie and the RBA and the Australian economy in the medium and longer term, rather than anything else, to be honest. So, however, if moves from governments and banks are not being taken, I wouldn't say with rush, you know, then that should be helping the local currency perform better than others, okay? Because a quick move on policy, whether fiscal, monetary, or government changes, right, it can be more risky, it can be worth more than it would if done down the line. So, guys, I think I will close for the day. In case you have any questions, okay, and you forgot asking, feel free to, you know, send me a message on LinkedIn, on Twitter, or even Instagram to get them answers. Otherwise, the recording is going to be online on our YouTube channel. So you feel free to comment there, and I will, of course, get back to you as soon as I can. I hope you enjoyed this webinar. I hope it was helpful, whether you are a beginner or a professional trader. And I want to wish to all of you, each one of you, a very nice weekend. And just to remind you that from Monday again, we are going to be back with our daily market insights video, where I analyze the indices. So I think I will talk about Nasdaq on Monday, because we've seen the technology sector booming a little bit. So Nasdaq actually has, surprisingly enough, has been the only equities index that has recovered all of the coronavirus inflicted losses. Okay, that means something. So on Monday, I'm going to talk about my expectations, technical expectations on Nasdaq and the US index as well, which is the basket of currencies against the dollar. So that will be for the day. Thank you very much once again. And I will see you again next week. If not, definitely on to the next NFP webinar, which is going to be in June. So adios and stay safe.